Hey guys, it's James from the Chart Guys. It's Wednesday, September 14th. Going to do my nightly video on commodities. Let's start with oil. So again, the same pattern that I've been sharing on my videos is still intact. High, higher low, lower high, higher low, lower high. We had a pretty big red day today, but on increasing bearish volume from the previous day, but we did maintain a higher low just barely. And what we need to watch out for is after losing this 200 MA. I said if we broke this pattern here, we'd probably see downside to the 200 MA, and then we could possibly see test of these price supports. And so what we want to look out for is $43, the low of this candle. Bulls definitely want to maintain $43 for a possible bounce. If we lose that, then we could test this price support here at 41.74, and then possibly test this longer-term uptrend line that goes some ways out here to back in March. I'm sorry, April. It's in April. So why did we get that dump in oil, and how do we foresee that coming? I keep mentioning these inside candles that form. And an inside candle is when a candle forms where the high and the low is within the price range of the high and the low of the previous candle, and what we want to see is which way the next candle breaks. If the price breaks above the high, then you're going to get a bullish move, and so we played bullish oil after we saw it break the high. If it gets a bearish break below the low, then we're going to have a bearish move. And what happened was that I highlighted last night in my video, if you caught it, is that we had this candle and then we had this inside candle form within the price range of the previous candle. So the low of this candle was 44.72, and the high was 46.51. The low was 44.77, and the high was 46.13. So as you saw, as soon as the price broke below the low, which was 44.77, that's kind of the go sign, and you saw all the momentum after that was to the bull. So as soon as price broke here, huge dump going on. So those inside candles are very important to take a look at. So what we want to watch for is will oil bulls take their stand here and keep the higher low pattern intact and regain the 200 MA, or will we break below $43? Let's go to gold. All right, gold daily. You can see it's still maintaining the 100 MA. It bounced off the 100 MA here, defended it, and we had to move up. Now we're having all this weakness. We have this candle forming with a longer lower wick, and what gold bulls want to do is get above, regain the 5 MA here, this green candle, and ideally want to gain all the MAs, the 10, the 20, and the 50. The price is getting closer to where the MAs are coming together, so hopefully we can get a move above it soon and continue bullish. And if we were to reject at the 5 MA here and break below the 100 MA, then we could see 1280 tests coming in coming days. Let's look at the hourly. Gold hourly. So gold hourly, this is what's been going on. So after this recent high, all we've been doing is lower, consolidate, lower, consolidate, lower, consolidate, lower, consolidate, lower, consolidate. And that's just setting lower highs and lower lows, which is no good for gold bulls. And what we need to do here is, as you can see, once we drop below the yellow MA, that's the 50 MA on the hourly, we haven't been able to gain it. We tried here and got rejected. Tried again all day today, several times, and we've been rejected. So, and we're close to, you can see on the hourly, we're close to a bearish MACD. So what we don't want to see is a repeat of this pattern where we consolidate and in a in a tightening range and then boom, sell off. So gold bulls need to make a move soon and recapture the 50 MA. So that's a clear MA we need to watch for. We do have jobless claims coming out at 8:30. That could be a catalyst with bad jobless numbers. It could be a catalyst because it could give some insinuation that because economic data on jobless reports are bad, that the federal government won't hike rates yet, and that could help markets and gold. Something to be wary of. Let's take a look at the dollar. The dollar was really weak today, and so I'm surprised that gold didn't get a stronger move. And what happened on the dollar, is if you look at the daily chart, all we've been doing on the daily chart is move up, down, sideways, lower, consolidate, lower. Same thing. It tried to change the trend here, but you could see that recently down, consolidate up, down, consolidate down. Same thing, and we are hitting this key downtrend line here on the daily, and it got rejected there. So what we'd like to see, if you're a gold bull and think that gold moves inversely to dollar, you want to see dollar get weaker. But there are times that the U.S. dollar and gold does move together. They're not always inversely related, but a lot of people at times think they are. So what we want to see is some continuation down. What I mentioned the other day on my last video is you see all these tiny volume days like this. What's been happening recently is you see this tiny day, and then you get an explosion one way, right? So I kind of knew that volume would definitely increase today, and it's a good sign for people who want to see dollar weak to see this increase in volume. So we could see more downside, and we could just see a tightening pattern because we're setting this low here, high, higher low, lower high so far. So we could just get tight, and we should get a break at some point. Let's go to see miners. What's going on? Come on, let's dig in. All right. It's not significant to me. Let's go to the hourly chart for miners. So miners, I mentioned this hourly uptrend line. It defended it yesterday, and the same thing's happening with the same as the dollar. We set this high. We set a higher low, lower high, higher low, lower high. Currently trying to set a higher low. So same thing as gold. You could see the gold 50 MA on the hourly has rejected the price, and you can see rejection. Try to get over it, but rejection. So on the hourly, what we want to do is get above the 50 MA. So that's where we need to keep our eyes out on for, is the hourly 50 MA, to see if miners can get above that price resistance. And on the 5-minute, I've been pointing out for day trading, the 20 MA is so important. And I've mentioned that every time you see miners lose the 20 MA, you see this dump, rejection, or downside. And when it gains the 20 MA on the 5-minute, it's the purple line. You can see some buying and some good upside buying. And then as soon as you lose it, you can see boom, boom, boom. When it got above the 20 MA here, I thought we were going to possibly continue higher, and break the 50 MA, but we were unable to do that all day. And it faked me out a couple times. Faked me out here, and it faked me out here. So always keep your stop losses tight. After hours looks like it's gained the 20 MA, but I don't really care that much for the after hour action until open. Let's finally look at natural gas daily. So good sign for natural gas bulls is that today we did break above this previous high set. So we are breaking the pattern of setting lower highs from here, this high, and then this lower high. So it has been going lower and lower. So we've broken the trend, but You can see right before we tested $3, the price was rejected, and we have this long upper wick, and we'll see if we get some follow through tomorrow to the downside. And what bulls, natural gas bulls, want to do is on any pullback, ideally you want to set a higher low and hopefully bounce off this uptrend line, or even better would be to bounce off one of these MAs. What we want to see is same as these scenarios here. We had this high, and then we saw some declining volume, and then boom, volume explosion, pullback, declining volume, going up, increasing volume. Same pattern. You want to see some decreasing volume on the pullbacks, and then you want to see a volume explosion to the upside. Again, long term, I'm bullish natural gas and think that it'll, the trend has changed for the long term, but this could take some while to play out till when it finally breaks out one way or the other. Talking about inside candles, I want to show you guys what's forming on SPY on the daily. Same thing as I've mentioned on the oil is that yesterday we got a inside candle, and today we did not have a direction either way. It stayed within the price range stayed within the high and the low of today. So we'll have another inside candle. I think after hours we did break below this low of 212.50 by like 10 cents. But I'd like to see how tomorrow goes and which way the price action breaks. So if the price gets above 214.70, we'll be bullish. If it goes below 212.50, it will be bearish. I forgot to mention this too. I think JNUG had another inside candle as well. So same thing as oil and SPY, these inside candles. So we had this candle, then we formed an inside candle. Today, we formed another inside candle. So 2 inside candles in a row. That just means the price is tightening, and we'll get a breakout soon one way or the other. And so watch for JNUG. If it breaks above 2024, that'll be bullish. And if it breaks below 1823, that will be bearish. And so you'll know which way to play it as soon as you see the price action break above or below one way or the other. If you were to enter early, your stop losses would be at the low of this candle if you're bullish, and if you are bearish, then your stop loss would be at the break above 2024. So something to watch out for tomorrow, and at least you know which way to play it based on the price on these inside candles. Hope you guys have a good night, and I will see you tomorrow.